Hey guys, it's Kara Ramsey here with the Rockin' Ramsey's real estate team.
Sheri Keene with Point Mortgage. Hi everybody.
We're going to talk a little bit about this new CalHFA program that's got released this week. We're real excited about that. Interest rates, the housing market, and also inflation and where we see that sending our rates toward the end of the year. Where do we sit with rates?
So interest rates are pretty much sitting on the conventional level in the low to mid 7% range, just depending, of course, again, on FICO score, down payment loan program. When you get into the government rates, which would be the FHA and the VA, you're pretty much sitting at about 6.5%. But now we're starting to see it come back down. So it really has been a roller coaster the last few months.
And then for the market, from what we can see and what's happening still in the market, is values are still rising. They're predicting in 5 years that's potentially going to go another 25% higher than we're at now. Yep. Thinking that you're sitting on the fence because you're waiting for those housing prices to come down may actually price yourself out of the market. Okay, so let's talk a little bit about inflation and how in the long term where we currently are sitting with inflation and how that's going to affect mortgage rates for everybody.
So what we're seeing right now is that the fact that the Feds only raised the federal funding rate by 25 basis points this last time, we are starting to see the bond market react positively, which is going to bring interest rates down. And by May, we'll actually have 12 months of reports of this inflation. We honestly feel the worst is over with. Most head economists feel that way too.
Last but not least, super exciting news, guys. This new program, I'm telling my very good friends, I would tell family members if they were in need of this, but if you're looking to buy a house, even if you've been banking that money to save for your down payment, this program is better for you. Save your money, keep it for renovations. Go with this program. I'm telling you, it's our best program that they've put out, and it is amazing. So tell us about this great program.
It's called the Dream for All, and it literally is a dream for all. So when you look at typical down payment assistance programs, either the rate's super high or you're not getting enough money to cover your closing costs. So what CalHFA has done, they are giving borrowers 20% to put either to use as your full down payment or to use as down payment and closing costs. So what that's doing is that's giving you a large down payment to bring your loan amount down to be able to qualify for higher amounts, and you're able to eliminate your PMI if you put 20% down. So that is a win-win across the board. Yeah. Over a $400 savings when you're looking at something like that.
Yeah. And the rate, like she just said, the rates, if you were just to come in on your own with a great 680 or higher credit score, trying to get a conventional loan with 20% down, you're in the sevens.
You're in the mid to upper sevens.
And this program?
You are at 6.375. It's, like I said, it's a win-win all the way across. It is considered a shared equity. So people say, well, what happens when I go to sell? So what will happen is that you'll have to pay back that 20% that you borrowed, and then any equity earned, you'll have to pay the program 20% of that shared equity. So that's how they're making their money. But it's a silent second. There's no interest tied to it. There's no payment tied to it. It's the 20% equity when you sell.
And you can refinance that as well. So even if you were like in a year decided you wanted to get out of that program, you've already got your 20% down and you've got the equity and you're in a position to refinance, you can refinance and be in the clear. Say rates come into the fives and you're like, it's a better rate than my 6.3. There you go. Boom. You pay back your 20% down you used and you give them back their share of the equity, and then you're in the free and clear.
Right. As loan officers, we'll be keeping a close eye on when is a good time for you to refi. And even if you decide that, okay, well, I don't have enough equity yet to refi, they will let you do a one-time refinance where you actually lower your rate and you can resubordinate that second. And all the other down payment programs right now, you can't do that on. So this is huge. That's going to help a lot of borrowers not get stuck if rates drop, but you go, oh, I don't quite have enough equity yet.
Yeah, that's amazing. I didn't know that little detail.
Yeah, I know.
It just gets better. I'm not, like I said, I'm telling my close family, friends, like it's not something I would share to them if I felt that it was putting anybody in a bad position. I feel like what this is actually doing is giving people the opportunity with the rates where they're at to still be able to buy a house. So
and that is so true
and,
because
geez.
the down payment assistance programs have been obsolete the last 2 to 3 years. You're looking at, and it's through CalHFA, but the ones that they have out, I mean, the rates right now on those where you get a 2% or 3% down payment, they're anywhere from 7.5 to, I hate to even say it, but 8.25. And so it's just obsolete. It's just nobody can qualify at those rates, not first-time buyers.
So why not go with this one where you have a lower payment, you have no PMI, you're still paying the money back. They're not just giving you the money for free.
Correct.
They're giving it to you basically so you can pocket your down payment if you have it, or want to do.
Even if you have the funds.
Yeah.
Right. And then the 3 qualifying factors on it is that you have to be a first-time buyer, which means you haven't owned property in the last 3 years. So that doesn't mean that you couldn't ever own. It's just the last 3 years. Credit score, minimum credit score is a 680. Annual income cap is at $173,000. But there's even workarounds with that. So if you have overtime or bonus, that puts you over that, but we don't need that to qualify and your base is under that 173. You're good to go.
But the funds are limited. They only gave so much to California to be able to do this.
They are, and they're not guaranteeing at all right now how long it's going to last because this is the first time this is rolled out. The Zoom call yesterday, there was 1,000 loan officers on it. So it's big. So we say don't wait, act fast, get pre-approved, and get out shopping. Get those funds reserved. Yes.
Yeah, save your money. And if you've been waiting to buy because you don't have your down payment, boom. There you go.
There you go.
You got it.
Yep.
Well, that's all we got for you guys today. I hope it was informational. And if you have any questions, you can reach out to myself or Sheri Keene. Her contact info will be at the bottom of the video. Thanks, guys. Talk soon.
Alrighty. Bye-bye.